Everybody is looking for ways to navigate the tax minefield of business bankruptcy. Sometimes, despite our best efforts, bankruptcy becomes unavoidable. It's a difficult decision, often fraught with emotional and financial stress. But amidst this turmoil, there's a critical aspect many overlook: taxes. Yes, even in bankruptcy, the taxman cometh. Ignoring or mishandling tax obligations during this period can lead to severe consequences. Penalties, legal issues, and even personal liability can arise. That's why understanding the tax implications of business bankruptcy is crucial. Navigating this complex landscape can feel like walking through a minefield. This video will equip you with the knowledge and strategies to handle your taxes effectively during a business bankruptcy. Whether you're facing the prospect of bankruptcy or just want to be prepared, this information is vital for any business owner. We'll break down complex tax jargon into easily digestible insights, empowering you to make informed decisions. Our goal is to help you minimize your tax liabilities and emerge from bankruptcy as smoothly as possible. We'll explore various aspects, including tax considerations for different bankruptcy chapters, potential tax traps to avoid, and available tax relief options. So, if you're ready to demystify the tax implications of business bankruptcy in 2024, buckle up. We're about to embark on a journey to equip you with the knowledge and strategies you need. Filing for bankruptcy isn't just a legal process, it triggers a cascade of tax implications. These consequences can be significant, affecting your business's assets, income, and even your personal finances. One of the first things to understand is the concept of debt forgiveness. When you file for bankruptcy, some or all of your debts may be discharged, meaning you're no longer legally obligated to repay them. Sounds great, right? Well, the IRS sees debt forgiveness as taxable income. This means you could potentially face a hefty tax bill, even though you haven't actually earned any money. The important takeaway here is to be aware that debt forgiveness can have significant tax consequences, and planning is crucial. Now let's talk about the different chapters of bankruptcy and their respective tax implications. The two most common chapters for businesses are Chapter 7 and Chapter 11. Chapter 7 is often referred to as liquidation bankruptcy. It involves selling off assets to pay creditors, and the business typically ceases to exist. Chapter 11, on the other hand, is known as reorganization bankruptcy. It allows the business to restructure its debts, operations, and finances to become profitable again. In Chapter 7, the focus is on liquidating assets and generating as much revenue as possible to satisfy creditors. This process can trigger capital gains taxes if assets are sold for more than their adjusted basis. The year 2024 brings its own set of tax code changes that businesses facing bankruptcy need to be aware of. One significant change relates to the treatment of net operating losses, or NOLs. NOLs occur when a business's deductible expenses exceed its taxable income. Previously, businesses could carry back NOLs to offset profits from prior years and receive a tax refund. However, recent tax law changes have limited the carryback period, making it more challenging for businesses to fully utilize their NOLs. This can impact a company's ability to reduce its tax liability during bankruptcy. The IRS is particularly attentive to transfers of assets, debt forgiveness, and other financial maneuvers that could potentially reduce tax liability. Navigating a business bankruptcy is challenging enough without the added burden of unexpected tax liabilities. The good news is that proactive tax planning can make a world of difference. By taking strategic steps before filing for bankruptcy, you can potentially minimize your tax burden and protect your assets. One crucial strategy is to carefully analyze your business's financial position and tax obligations. Understanding your current tax liabilities, potential capital gains, and available deductions is essential. This analysis will provide a clear picture of your tax exposure and help you make informed decisions. Another important step is to explore all available tax relief options. The tax code offers various provisions that can benefit businesses facing financial distress. For instance, you might qualify for tax deferrals, installment agreements, or even offers in compromise, which allow you to settle your tax debt for less than the full amount owed. Remember, timing is key when it comes to pre-bankruptcy tax planning. Consulting with a qualified tax professional is crucial to ensure you're taking advantage of all legitimate options and avoiding potential pitfalls. Emerging from bankruptcy is a significant milestone, but it's not the end of your tax obligations. Post-bankruptcy tax planning is essential to ensure a smooth transition and a fresh start for your business. One of the key areas to address is understanding the tax implications of any debt discharged during bankruptcy. As we discussed earlier, forgiven debt is often treated as taxable income. However, there are exceptions to this rule, such as insolvency exclusions and specific provisions for different types of debt. Understanding these exceptions and how they apply to your situation is crucial to minimize your tax liability. Another critical aspect of post-bankruptcy tax planning is rebuilding your business's tax compliance infrastructure. This includes obtaining a new employer identification number, EIN, if necessary, setting up proper bookkeeping practices, and meeting all tax filing deadlines. Additionally, it's essential to stay informed about any changes in tax laws that may affect your business. Navigating the complex world of business bankruptcy and its tax implications can be overwhelming, even for the most seasoned entrepreneurs. While this video provides valuable insights and guidance, it's no substitute for personalized professional advice. Seeking guidance from a qualified tax attorney and a certified public accountant or CPA specializing in bankruptcy is paramount. These professionals possess in-depth knowledge of tax laws, bankruptcy procedures, and available strategies to protect your interests. They can provide tailored advice based on your specific circumstances, helping you navigate the complexities of the process with confidence. A tax professional can analyze your financial situation, identify potential tax liabilities, and develop a customized plan to minimize your tax burden. They can also represent you before the IRS, negotiate on your behalf, and ensure you meet all legal requirements. Let's dive into some real-world examples to illustrate how strategic tax planning during bankruptcy can make all the difference. Our first case study involves a promising tech startup that hit a major roadblock. Despite developing innovative software, they struggled to secure funding and faced mounting debts. Recognizing the need for a financial overhaul, they filed for Chapter 11 bankruptcy. Working closely with a tax attorney and a CPA specializing in business restructuring, they developed a comprehensive plan. They identified valuable intellectual property assets, restructured their debt obligations, and negotiated a favorable payment plan with the IRS for outstanding taxes. By leveraging tax provisions for NOLs and utilizing debt for equity swaps, they significantly reduced their tax liability and emerged from bankruptcy as a leaner, more financially stable company. This case highlights the importance of proactive tax planning and seeking expert guidance to navigate the complexities of bankruptcy. The tech startup story is a testament to the fact that bankruptcy doesn't have to be the end. Our next case study takes us to the bustling culinary scene, where a beloved local restaurant faced a perfect storm of challenges. Rising food costs, increased competition, and a decline in consumer spending forced them to confront the possibility of closing their doors for good. Determined to preserve their legacy and the jobs of their loyal employees, they decided to file for Chapter 11 bankruptcy. Working with a team of experts, including a restaurant consultant and a tax advisor, they developed a plan to revamp their menu, streamline operations, and renegotiate lease terms. Through careful planning and a commitment to innovation, they successfully navigated the bankruptcy process, re-emerging as a thriving establishment with a loyal following. This case study showcases the importance of adapting to changing market conditions and seeking specialized expertise to navigate the unique challenges of specific industries. These case studies offer valuable lessons for any business owner facing the prospect of bankruptcy. First and foremost, they underscore the critical importance of seeking professional guidance early in the process. Tax attorneys, CPAs, and industry-specific consultants can provide invaluable insights, identify potential pitfalls, and develop tailored strategies to minimize your tax burden. Secondly, these cases highlight the power of proactive planning. By analyzing your financial position, exploring tax relief options, and making strategic decisions before filing for bankruptcy, you can significantly enhance your chances of a successful outcome. With the right approach, expert guidance, and a commitment to innovation, you can navigate the challenges, overcome financial obstacles, and emerge stronger and more resilient than ever before. Running a business is like navigating a ship through unpredictable waters. You need to be constantly aware of the signs of a storm brewing. Similarly, certain red flags in your business's financial health indicate it's time to seek expert help. Ignoring these warning signs can lead to more severe consequences down the line, especially regarding taxes. One of the most obvious red flags is a consistent decline in revenue. If your business is struggling to generate income and meet its financial obligations, it's crucial to seek professional advice sooner rather than later. Another warning sign is mounting debt. Unmanageable debt can quickly spiral out of control, putting immense pressure on your business's cash flow and jeopardizing its future. Additionally, keep a close eye on your tax compliance. Falling behind on tax payments, failing to file returns on time, or receiving notices from the IRS can indicate a need for professional intervention. Recognizing these red flags early and seeking expert help can make a significant difference in navigating challenging financial situations. A proactive approach allows you to explore all available options, make informed decisions, and potentially avoid more severe consequences. When facing the complexities of business bankruptcy and its tax implications, having the right team of professionals by your side is crucial. Think of it like assembling an A-team of experts who can guide you through the process, protect your interests, and help you achieve the best possible outcome. First and foremost, you'll need a seasoned bankruptcy attorney. Look for an attorney specializing in business bankruptcy, particularly in your industry. They will guide you through the legal procedures, represent your interests in court, and ensure you comply with all legal requirements. Equally important is a certified public accountant, CPA, with expertise in bankruptcy and tax law. A skilled CPA can analyze your financial situation, identify potential tax liabilities, and develop strategies to minimize your tax burden. Depending on your business's specific circumstances, you might also need other professionals, such as a business valuation expert or a restructuring specialist. These experts can provide specialized knowledge and insights to help you make informed decisions and navigate the unique challenges of your industry. Navigating business bankruptcy and its tax implications requires more than just assembling a team of experts. It demands open and transparent communication with them. Remember, your professionals are there to help you, but they can only do so effectively if you provide them with accurate and complete information. Be upfront about your financial situation, including your assets, debts, income, and expenses. Don't try to hide or downplay any financial difficulties. Transparency is crucial for your team to assess your situation accurately, identify potential risks, and develop the most effective strategies. Maintain open lines of communication throughout the process. Ask questions, seek clarification when needed, and promptly address any concerns or issues that arise. Remember, you're not alone in this journey. Your team of professionals is there to support you every step of the way. Regularly communicate with your creditors as well. Transparency with creditors can help build trust and potentially lead to more favorable outcomes in negotiations. Navigating the choppy waters of business bankruptcy is never easy. It's a journey fraught with challenges, uncertainties, and difficult decisions. But as we've explored throughout this video, understanding the tax implications and taking proactive steps can make a world of difference. Remember, bankruptcy doesn't have to be the end of your business story. It can be a turning point, an opportunity for a fresh start. Think of it as charting a new course for your ship. The storms may be raging, but with the right map, a skilled crew, and a steady hand on the helm, you can weather the tempest and reach calmer waters. By understanding the tax consequences, you can minimize liabilities, protect your assets, and emerge from bankruptcy stronger and more resilient. Throughout this video, we've emphasized the importance of proactive planning. Just as a skilled sailor studies weather patterns and charts their course carefully, a savvy business owner must anticipate challenges and plan accordingly. This is especially true when it comes to taxes during bankruptcy. By seeking expert advice early on, you gain a clear understanding of your tax obligations, potential liabilities, and available options. This knowledge empowers you to make informed decisions that minimize your tax burden and protect your financial well-being. Remember, tax laws are complex and constantly evolving. What worked in the past may not be applicable today. That's why staying informed and seeking professional guidance is paramount. Don't let tax traps catch you off guard. With careful planning and expert advice, you can navigate the choppy waters of bankruptcy with confidence and emerge on the other side financially sound. Tax laws are like shifting sands. They're constantly evolving. What's applicable today might be outdated tomorrow. This constant change makes staying informed crucial, especially during a business bankruptcy where the stakes are high. Make it a habit to stay updated on tax law changes that might impact your business. Subscribe to industry newsletters, attend webinars, and consult with your tax advisor regularly. Remember, knowledge is power. The more you understand about the tax implications of bankruptcy, the better equipped you'll be to make strategic decisions that protect your business and your financial future. Staying informed allows you to adapt to changes, seize opportunities, and avoid costly pitfalls. It's an investment in your business's long-term success. As we conclude this video, we want to leave you with a sense of hope and empowerment. While facing business bankruptcy is undoubtedly challenging, it doesn't have to define your future. By understanding the tax implications, seeking expert guidance, and making informed decisions, you can navigate this complex process and emerge stronger on the other side. Remember, you're not alone. Many successful businesses have overcome bankruptcy to achieve even greater heights. Your journey to financial stability starts now, with the knowledge and tools you've gained from this video. Take the first step towards a brighter future. Contact a qualified tax professional, explore your options, and chart a new course for your business. Don't forget to like this video and subscribe to our channel for more finance and accounting tips for entrepreneurs. We're here to support you every step of the way.